Alágbára, Shalom. Oh. Good afternoon.
Good afternoon, sir.
Okay, I hope you can hear me. So well, others will join us, and I don't really like wasting time.
Yeah, sorry I joined a bit later. I was on a phone call, but
no, not really. You know, it's 3 o'clock, so I just linked up now. Okay, so I'm starting right away. Today we'll be looking at so many things together. We look at trades, we look at trend, we look at reversal, pullback, continuation of trends, and all of that. And what happens to trade? You know, we receive signals. Not people can get signal anywhere, but how do we manage this signal? Managing the signal means that somebody gave you a signal on EJ, somebody gave you a signal on EU or pounds, yen, or pounds, dollar. So anybody can have signal, and the signal also depends on the way the person is analyzing the trade or the chart. And what now happens after you get the signal? What do you do with the signal? How do you now know that, oh, the signal is actually on course, or the signal is not moving, or the signal is going to fail? Signal can do a whole lot of things. Now, in forex trading, there are so many things that people, you know, put together to really trade. We have the technical analysis, we have the price action. Some people probably make use of wave, the wave theory, Elliot's wave, and so many wave, and so many things that people use. But the truth of the matter is that if you look at human being itself, the right side of the human being, if you take a longitudinal section of human being from the head to toe and you cut into two, the right side of the human being is not exactly the same as the left side. So there is that imperfection. So if the right side really looks like the left, the person will look like a robot because the person will be too perfect. So the imperfection makes us beautiful. Now, the same thing with the trade, because this is human behavior, the way we think, the way we react, the way we don't want to trade, the way we say, okay, we want to reject, the way we want to, you know, supply and demand and all of that. So, but there are two things we have to see together in forex trading. The technical analysis deals more with linear measurement, linear mathematical. That is technical analysis. It's more or less linear. But the non-linear aspect of the Forex, the technical analysis does not do that. And which means that the price might not exactly touch the area you expect it to touch. the price exactly might not do what you think or you are forecasting it to do. Because it's like, what is the mood of those who are going to enter the market tomorrow or next tomorrow? You don't know. Now, what technical analysis does is to take a receipt of the transaction that has occurred, and we can use that to project into what exactly is likely to happen. That is what technical analysis does. So there is a lagging. There's a lagging. The lagging means that, you know, there is that receipt, the transaction must occur before you use the technical analysis. But what is happening right now in the market as it's going on, the technical analysis does not undo that. And so we can understand why at times the technical analysis might fail. But what does not fail is understanding the price action. The candle formation, what we see will tell us this is the mood of the market. This is what is going to happen. Eventually, if we are able to fuse both the technical analysis and your price action, then you will understand a whole lot in Forex. And you understand that, okay, yes, this is what technical analysis says, but I think the market or the price is not ready to do that yet. So how do I engage it? So this is what we are going to see. We're going to understand the technical analysis. And now, what are the instruments of the technical analysis? They will talk of the stochastic, they talk of the RSI, they talk of all the indicators, all of them put together. They are instruments of technical analysis. So you cannot be successful when you are glued to technical analysis. But when you combine so many things together, then they are lying in success. So your ability to determine or detect that the price is going, you know, as expected is what is needed. Now, if we are plugged to any trade, we want to trade any pair, we must understand that the pair can do 3 or 5 things. Basically 3 things. The first thing is that the pair can do is to go on uptrend. The second thing the pair can do is to go on downtrend. And the third thing that pair can do is to consolidate. So we must understand that the pair can actually go on uptrend or a downtrend or a consolidation. But what we try to do is to see the most probable movement, the most likely movement that the price is going to make, and plan to execute and ride with it. That is what we do. Now, this is euro dollar. I'm going to use euro dollar to teach us. This is euro dollar on weekly time frame. This is euro dollar. Now, this is 200 MA, and this is 50 MA. So 200 MA, 50 MA, which we know on the chart. Now, what we tell ourselves is that when you take the moving averages, when you're on the weekly chart and you take your moving averages, if the price is moving around, coiling around the 200 MA, we'll say is a consolidation on that time frame. If the price is above the moving average of 200, which is the black in this case, we'll say it is in uptrend. If the price is below it, we'll say it is in the lower, it's in the downtrend. Now, this is weekly chart. Now, you can see the 200 moving average here, that below here, you have price. And this is clearly nothing but what? Downtrend here. The 200 and the 50 MA were actually the price were, below them. And we can see the way they are crossing. Now, above here, we can see that the price has lifted above, clearly above 200 MA, which means that the price presently is in what? An uptrend. That is what is evident if I zoom, out like this. So, and again, you can see here that now the price had used 50 MA as a resistance. Now, before I go into details of, okay, how to approach trade, I want us to see what price action. Price action is just the statement made by our candles. Now, let me enlarge. I've talked to us about this kind of candle formation here. This is what? This is a morning star. And when you see a morning star, you know that it's going to be an uptrend. I saw this when this was formed, and I know that, of course, the price is going to go in an uptrend. Okay, so this is a morning star. Now, how do we use these candles? How do we use these candles? Now, at the upper side of the chart, that is where you have your sellers. And at the lower side here, that's where you have the buyers. The buyers push the market upwards and the sellers push the market downward. So we know that. So we can now understand candle formation and candle pattern and how to make use of them. Now, let's look at this candle, for instance. This particular candle. You can see that this particular candle, this is price action I'm teaching. Any candle, any price action or pin bar is more powerful when the wick of it is at least about 3 times the body of the size of the body. But that is not to say that even in this case is not important. But when you see pin bar, that the body is small and the wick is so long, it is very, very important. Now, in this situation that you have here, look at this scenario. The wick is here. Can you see how long? And this is a body. Usually, this is a reversal candle. This is a reversal candle. Now, the price has been buying, and we can see a reversal here. Now, if you look at the lower wick here, it is long. And you can see the tail here, how long it is. But this one is relatively long. Now, when you see a wick at the upper end, in this case, of course, we are selling. In this case, we are selling here. The shorter the wick, the stronger the message the candle is telling us or is giving out. When you have the tail long and the edge of the wick is very small, that candle is very important. Very, very important. But if the tail is not long and the wick almost they are the same, is more of like a continuation that is telling you. Or if you have a small edge, like in this case, and the tail is not that long, it's nothing really. You have to look for what will give the price away. But in this case, let's just try to understand the message, what this thing is telling us. It's telling us that they have been buying, the buyers were in control this week, 2 weeks in a row. And the third week, we had this formed. And this tells us something that the sellers are coming into the market. Because of the way you can see this formation of the candle, the sellers are coming to the market. Now, remember that the sellers are pushing the market from here down. You can see a scenario where this body is more up here and the tail is longer. It's going to give us a different interpretation because it's a bearish candle. See, it's a bearish candle here. The body is down, the tail is long. Of course, the pressure is coming from up. That is what you expect. But if the body is more up here and the tail is longer, it does not tell us reversal. It is continuation. I don't know if you get my point. So if now this bearish candle, the body is more towards the up here, and the tail is here, is more of a continuation. But because the body is down and the tail is up, then it's a reversal. I want to see if I can see something. Okay, yeah. Let's look at this candle. This is another example of a candle. You can see this candle here. This is a bullish candle. Now, the candle, you can see the head here, the body here, and the tail in this region. Now, if the bulls are pushing, the bulls will be moving and pushing the price up. So why don't we see the body formed here and the tail long here, which would tell us that the buyers are pushing? But unfortunately, it is something else that we saw. We saw that the body, was more down and the tail was up, which means the pressure are coming inside or are coming from the sellers. In this kind of scenario, when you see a candle like this, it is just a pullback. That is what it means. It means a pullback. I'm saying all of this for people that scalp. So you now know when you are having a pullback and how to engage that pullback. So when you see in this case scenario, if it has been like a bearish candle that formed this way, then it's a reversal. Because the pressure, the bears were pulling so you can see the string or the wick created by the sellers, but the body is more down here. So it's like it's going to be a pullback. And that is why you had this and this formed and the price continued. It is important to understand the mood of the price action to know what you want to do when it is created. If this body is up here and the tail is down, we might not likely have this a pullback or a reversal. You can call it a reversal here because it's like for 2 weeks. It's not something small. Yeah, so we can just have that. So, but a long reversal or you can say a pullback, and this because this is a reversal when you have a long, movement and all of that, or a deep correction, in this situation. Let me look for more candles. Let me look for more candles. Like in this situation, you have it more or less forming like something that looks like a morning star, but it's not a complete morning star. So you don't want to disregard this as a morning star. You don't want to regard this as a morning star because this body must be full, or at least almost as full as this, with this to say, oh, this is a proper morning star. And when you have morning star within a consolidation zone, you don't want to take them too seriously. They might not really ride, up as you expect. There might be just a little momentum, as you can see in this case also, and in this case scenario, you can just have a little movement. But the way we interpret candle matters. Let me look for another. Okay. Now, in this case scenario, now you can see the movement here. Now, the first thing we saw was that the bulls were having their day, moving and moving and moving and moving and moving. And this is like a doji with small volatility. So, and this one formed. And the first thing we saw was this, like an hammer. So a revised hammer, this is like for a reversal, because you can see at the end, the bulls came in and the small head and a relatively short, tail. And of course, they were warming up to change the tide, and this formed. When you see this, you know that they're going to probably is not that strong. They're going to probably consolidate for a while before they finally move. And this formed, this armor tells us that the price is coming down. You can see, though the bulls are their way, but you can see that the bulls are losing their momentum because the buyers are coming in, pushing the price down here. So you can see that, you can understand that. So they are trying to do that. Even when the bulls try to push up here, they rarely can fight here. So this one, it's clear. And then they now push it to the thin level. When you see these two, then you know that the sellers will take over the market as soon as possible. And you need to wait for this. You might not need to ride with this because it's always good to confirm. So this week was enough to confirm that the price is going down. And one thing I do tell us is that when you see the price has left, the boss has left before you, don't follow the boss. Wait and try to analyze where price will come back to pick you. And so this was an opportunity to fight back to pick you. And before this and movement, and all this down movement. And when we got here, of course, we know this is a morning star and the price is going to go up. Now, this is the new week. This is the new week. So this is the new week. Like 3 weeks in a row, we had euro trying to dominate the dollar. Now, this is the new week. With this new week, you have to see what is happening. This is, like, you can see the small edge, small bit. I hope you can see very well. I hope if you shine your eye very well, shine it very well. At the edge there is a little dot. Yeah, when you see those little dots, yeah, it's very strong. It's strong. It's telling you that the price is reversing. The price is reversing. For how long it's going to do that, we'll see. And this is a tail, but it's not really strong. There is no strong pressure. If you have it more longer here, then you see, oh, there's going to be a whole lot of pressure. So the price probably may get to this point or do this. And we'll be seeing more price action and how to interpret them and what they tell us. I'm trying to scan and see. Yeah, this is another good price action. Though it's like an evening star here, you can see the bulls, and this is a strong rejection here. So the longer it is, the stronger the rejection. So it is a long rejection, so you know that this price is going to go bearish over time. And a formation of, though the little consolidation around this area, an evening star, a morning star, then this is a proper evening star that sent the price down. So now let's go to how to analyze the trade. Let's go to how to analyze the trade. The first thing to do is to look at your trade on the weekly time frame. That is the first thing to do. Now, may I tell us, once is 45 minutes and we cut off, let's just relog and I will readmit us. I want us to get this, please. I want us to get this so that you know that it's not, you can be profitable in Forex when you know what the price is doing. The first thing that we have to do is to tell ourselves, what is the market doing? The market is in an uptrend. We established that when I zoomed out. You can see that's what the market is. Is from here. It was confirmed above here that the market has been in an uptrend. So the market sold, breaking this level and getting to this high. Then you now have a correction or a pullback. And what's informed or what started that pullback was this pin bar here. The pin back, the pullback message was given earlier here. But they had this rough. If anybody had been probably checking the weekly candles, you will know that sooner or later, rain is going to pour. So, and one would have been seeing the message here. So this was the first indication that there was going to be a pullback or a reversal. And all these are just 3 weeks in a row. They were not ready until eventually this pin bar with a tiny body sent the price down. So the price came down, touching this area, and now the price now used 50 MA. Price will not just break through dynamic support or resistance anyhow. So in this case, the 50 MA is serving as a dynamic resistance to price, or support rather, to price. And we can see the formation of these morning star. You don't see a morning star and the next thing you want to do is to buy. I mean, is to sell. You want to buy. You want to understand how to engage it. If anybody is calling a sell after the formation of a morning star, then you know that something is wrong with them. You have to check the weekly. If the morning star formed on the weekly and on the 4 hour you saw an evening star, disregard the evening star on the 4 hour. You have to understand that a morning star had formed on the weekly. So the higher the time frame, the more correct the price action, and as in the message the price is telling you. So now we saw that an uptrend and a pullback or a reversal. Now we now see that, okay, after that the formation tell us that, okay, we are going to go further up, and they did that. And with this, they were not able to break above this level. Let me now zoom to tell us how to actually, now, if I'm going to look for, in my mind, my stop loss for this week, my stop loss should be here, just a bit above that week. By the time I finish my analysis, you understand that the stop loss is going to go lower than what I'm just giving us. So maximally, the price, with this price action, I expect that, with this price action, the price will not go beyond 21,565, which is as in the stop loss. Now, here at the top there, or the top of where you have the bullish and the bearish candle, that's even if they are head here. So it's where price majorly played. So if you are looking for an entry, those are the areas anybody can look for entry. In case we are selling, what you have to do first is that once you are able to get your entry, one of the first places you can think of your exit is, if not at the very bottom here, if price pulls up, you can see at the very bottom of this bearish candle, you can see the way it worked with all these support here, where you had this week. Everything fell in place, even with the, at this point, with the resistance here. So it's a very key area. So depending on where the price, so if you are going to plot if you plot your entry above this line and you want to look for your TP1 should be at that level when you are selling. And the next area of TP will be at the base of this candle here, which is here. At the very base will work as your TP2. TP2, you can see the way it fell in place, everything working together. Thank you is back. Thank you is back. Thank you is back. So you can see how it's working together, that the base here also falls here and as a support and support here. So the price is going to test those area as support. I can see that it's working. Thank you. So it's going to test those area as support. So this might be our TP1. This is the next TP, which is TP2, and the price is going to go much more lower. Then we are looking at the very tip of this bearish, the bullish candle as another TP3. That is how to engage it. You can't just work within a week and say, okay, you are entering here and you are coming here to draw your TP over Lanoni. Because when you do that, anything can change. The momentum can change. So we take it piecemeal, and that is like a weekly affair. And if you take your stuff a weekly on weekly basis, you are good. We must just understand the mood of the market. Now, having seen this price action, that the price action tells us that is a reversal, I can't tell if the price is going to break below here and break 50 MA, or is going to use 50 MA again as what? As a support to form a double bottom. You can do that, but that is none of my business. My business now is how to engage what I'm looking at. So with this, I know that the price is moving down. So, and I know that I don't want to at least go beyond here or here for now. To come here is too much. Oh, deep gone. Oh, deep gone. So let me just play around depending on where I enter this trade and see myself lower here, or because I expect the price to go below lower here or just at the base here. So we'll see. Now, with this, price is going to push back. Price is going to push back. So now let's look at the daily candle to understand what is going to happen next. The summation of last week is here, which is the what is this reversal armor, which is a reverse candle. So we are going to do what? To pull back now. So let's look at the daily candle. Switching to the daily, we look at the last day. Now you can now see the last day candle. This is what has formed in your daily, using your daily candle. Please listen to me carefully. We knew that this one formed. The price made several attempts to break, and price could not go beyond here. Can you see at this level where I have my cursor? Price, you know, if you are using technical analysis, the technical analysis will say price is going to get there. That is why you should have your TP. See, it failed. And that's what I said, that the technical analysis gives you a linear permutation. Let me use that word. The technical analysis gives you a linear permutation, but when you understand your price action, the candle, you understand that the non-linear aspect of it and how to really engage. So ideally, if anybody is going to do something, is you look for where the wick is to actually plan your TP. Now, this particular trade that we are looking at, we said used this 50 MA as a support on the weekly. Now on the daily, you can see that that is not what you are seeing. At this area, the price engaged this 50 MA here as a resistance. What I want to do is, if I'm going to sell this, I want to stop at the level of 50 MA as a support to look for my stop, take profit. Because price is still going to react at this level. Whatever now happens after, if price is able to break it, then I know I want to go down more to sell. I don't want to move in a jiffy from here down to this place, pretending that price is going to come right here. This is price action. This is live and direct, and that is what we have to see. So we have to know that the price must first engage this, the 50 MA, as a resistance. If it's able to break it, fine. Then we are going to go and deal with it like that. Now, a reverse armor formed like here, and with this, because more or less the bulls we're still riding, but it's a price action that tells me that price may reverse because of what has been happening here. You can see consolidation here. The sellers were trying to come to the market after this much consolidation, and there was no price action really from the sellers to tell us that they were going to sell. You know, this doji came in, which means the seller tried to push, and though the sellers still had their weight here, they tried to push up. You know, it ended up like this at par, and this one formed. When you see a candle like this, is nowhere. You can see that red candle. The third red candle is nowhere. It's not telling me anything. It's not telling me that they're going to sell. When you see that more or less that the tail and the wick, they are almost equal, the head and they are almost equal, you know, it's not telling me anything. So anybody that does not know, you say, oh, they want to sell from here and you are selling from here. See what happened, the bots. So you must look at your weekly candle, the price action, to tell if the price is still going to, is only when I know they are ready to move down that I will okay, they are ready to do it. So that was why last week we still felt that we can still buy, and we bought. Of course, buying also, we must know that we are buying with all care and caution because the price is getting to almost the last whatever that it has to break an important resistance to see that if it's going to continue or not. And again, immediately after formation of this, you know, engulfing candle, you can see the reaction again. And this formation of this candle, when you see a pattern like this kind of price action tells you a pullback or a reversal. So because it formed this way, where you saw the bulls having it all with a small head and a tail, that gives me an impression that the buyers, even they are ready to now, the sellers are trying to force the market down. The buyers are still going to give me an opportunity to go up one more time to look for exit and exit this trade before the sellers come in. It's not a kind of a trade that should, you know, get you in the middle of nowhere. So there is a warning sign and a doji formed, and all of a sudden on Friday, nobody will expect that this engulfing candle will pour down. And this is where we are. This is where we are. Okay? Now, how do we trade this? If I'm going to trade this, I'm going to fine-tune on the 4 hour to look for entry. But what is my idea of trading? I'm not going to join this and jump into it. I'm going to look for my stop loss around this area. And ideally, actually, after ideally candle had closed, I don't expect a retracement of 78 point something percent retracement. If that happens, forget. That trade is going to fail. If that happens, anything more than 61.8 fib on a daily, that trade is going to fail, most likely. It can only occur. You can have 61.8 and 78 during consolidation. The formation here does not look like consolidation. Look at this and look at this. Look at this. This is not consolidation. This is a volatility. So we have confirmed that. So the nearest resistance to this engulfing candle is what is going to be my entry. Now, what are the nearest resistance that you can see? Now, where you have this tail is a resistance. I want you to listen to me. At that tail, where you have the price of 120,569 is the first possible entry. So the price is going to go back to that area on the daily. You see, it's on the daily. Go back there on the daily to try that area. The next possible area is where you have the body, which is here as a second entry. Anything more than that, forget it. That is how to look at it on the daily. Again, I see that this has broken this area. This engulfing candle broke this support. The support that was broken is what the price is going to retest as what? As a resistance. So ideally, I should expect that my entry should be here. Price could be funny to go deep and do this. So if I'm giving you a two entry, a double entry, this will be my first entry, and that is what you should pick. You can leave the second entry, possible entry, if the price gets here, which will be around the body here, if the price gets there, which I doubt. And your stop loss can just be just a bit above here. So as the price begins to move down and down, then you can now shift your stop loss because the price is moving down. Why I'm not going to use this area as stop loss, somebody should ask me, because I'm seeing better on the daily candle now that there was power from the dollar. If the candle that formed here was as short as this, then I will pick the top of this as my stop loss. But with this power demonstration, I can still come here, this area or this zone, and pick as my stop loss. It does not really matter because I know that this price is going to sell. But at the same time, around this area, I might just put my warning signal here. That is what I do now. I come to this area, I put a line and a notice. If price get there, close your trade. Price is not expected where you have this line. If you should get there, close your trade. That means the bears, they have failed to go down. Now, having said that, let's now go to 4 hours to pinpoint our entry. Now, you can see we want to pinpoint our entry, like I told us. Now, pinpointing our entry, we are going to now look. You cannot see that now this thing has been confirmed here on the 4 hour, because the first thing you have to see that the thing is changing as reversed is that the price is going to send a bullish candle or an engulfing candle right through the 50 MA on the 4 hour. That is the first thing you do. The trend line being broken, the 50 MA being broken, these are the first set of signs that you will get